Hello traders, today's topic is going to be the Patreon suggested video of arbitrage. And the type of arbitrage that we're going to be talking about today is triangular arbitrage and how I was able to sell FBTC at this rate, 6031, and then immediately get back into FBTC much lower for a 3% quick arbitrage scalp. This video is going to be very complex and probably one of the most complex videos that I'm going to be hosting here on my channel. So what I've done is I've broken this into 4 levels, from beginner, intermediate, expert to advanced. And if you can make it through all 4 levels of this video, then I think that you will have the knowledge to begin using triangular arbitrage in the markets. So with that, let's go to level 1. All right, traders. Let's go to just what is triangular arbitrage and a hypothetical example that would explain it. So, level 1. Okay, so imagine that we are a vendor, and as a vendor, we are selling 10 bananas. We're at the farmer's market, and we found that we actually have 2 buyers. One buyer is going to offer us 10 apples. And the other buyer is going to just offer us $10. Now, by itself, this doesn't really tell us anything besides just boring farmer's market, but there's another key piece of information here. Imagine that 1 apple is equal to $1.1. This is going to offer one a triangular arbitrage opportunity. So if you haven't realized it yet, imagine which one you would rather do. Let me give you guys 2 seconds for this. So if you had said that the best thing to do would be to trade your 10 bananas for 10 apples and then trade those 10 apples back to dollars, then that would have been the correct answer. Because had we done that and we gotten the 10 apples, then we can immediately sell that for 11 USD, as is the exchange rate for the 10 apples. So let me just write that in here. 11 USD. Wherein we probably would have just gotten $10, but we ended up getting $11 by going through another type of market and then transferring back to the market that we wanted. So in essence, this is really what triangular arbitrage is doing, but with cryptocurrencies. So let's go take a look at what is this actually going to do with actual crypto markets. All right, traders, you made it to level 2 for triangular arbitrage. So this is a hypothetical coin example where imagine that we are trading an altcoin named ALT. And there is a way that we can actually double our Ethereum, our starting capital of 1 ETH. We can make that into 2 Ethereum by using triangular arbitrage, by converting it to one coin and then converting it back to another and then converting it back to its base coin. So how do we do that? Well, to give a little hint, our first step, we really have 2 options. We can either buy Bitcoin immediately at the FBTC rate, and if we bought this much Bitcoin with 1 Ethereum, then we would get 0.05 Bitcoin. Or we have the choice of buying 10 alts, 10 alt. And we would be able to do that because 1 alt is equal to 0.1 Ethereum, so 1 Ethereum would be equal to 10 alt. Now, if you would like, you can write this out on paper or just try to think about how the best course of action to arbitrage this kind of market would be. I'm going to give you guys 3 seconds, or if you want to pause the video. All right, so the answer here is you'd want to buy 10 alt for 1 Ethereum. This is the first course of action that we're going to want to take. Step 2. What are we going to do with those 10 alt? Well, we can actually sell 10 alt for 0.1 BTC. Because if we look at the rate here, 1 alt is equal to 0.01 BTC. So if we sell 10, then we would get 0.1 Bitcoin. Now, what do we do with that 0.1 Bitcoin? Well, we want to convert it back to our starting capital, our base capital here. So to do that, we would just buy 2 ETH with 1 BTC, with 0.1 BTC. Now, if you're a little bit confused at this part, let me just show you guys how exactly I did that. So we know that we have 0.1 BTC from this previous transaction. So what we can do is we also know that 1 Bitcoin is equal to 20 Ethereum, as is the ETH BTC rate. one Ethereum is equal to 0.05 Bitcoin, and also 1 Bitcoin is equal to 20 Ethereum. They're the exact same, just inverse. So we can use this and actually buy 2F with 0.1 BTC, as you can see, as is the exchange rate here. So from this triangular arbitrage, we were actually able to exploit the mispricing here between Alt BTC, Alt F, and ETH BTC to actually generate a nice little profit of 1 Ethereum. And this is really what we're going to be looking for in the actual market, in looking for these triangular arbitrage opportunities and executing on them. So with that, let's go on to the trade that I made and how I was able to do that. All right, traders, you made it to part 3, level 3 of the triangular arbitrage method. So now let's take a look at the trade I had made and how one can replicate this kind of trade. Notice here that I found HOTF was undervalued. So I bought at 171, I bought at 165, and I bought at 164. How did I know that HOTF was undervalued, and why did I just immediately buy this coin? Well, let's take a look at a model that I had created that told me that this rate was undervalued and I should buy it and sell it immediately back to HOTBTC. This is going to look a little bit complex and complicated at first, and it certainly did for me. It took me a few hours to really wrap my brain around what this model is. But what we have here is this blue line is the actual ETH-BTC rate trading on Binance. Now what we have with these kind of janky candlesticks is the HOBTC rate divided by HOTF. What this means is that if I traded in 1 Ethereum, I would receive this much Bitcoin if I arbitraged these two coins. However, if I traded in 1 Ethereum and just took it at the ETH-BTC rate on Binance, I would receive this much Bitcoin. So what I can actually do is I can actually sell 1 Ethereum, arbitrage this, and immediately get this much Bitcoin, and then immediately convert that back into Ethereum for a nice little profit of about 3%. I'm going to show you guys exactly the step-by-step dynamics of how that works, but before we do that, let's talk about this chart a little bit more. Whenever this rate goes massively above the blue line, that means that HOTBTC is overvalued relative to HOTF, as when any type of numerator gets very large, what it's going to do is bring the overall value up. Whenever the denominator gets very large or overvalued, what's going to happen is that the overall fraction or the overall value is going to go down. So I saw that as this was going, as this was here at the time that I took the screenshot and began the arbitrage, HOTBTC is really overvalued relative to HOTF. HOTF should not be this cheap, and HOTBTC should not be this expensive. So what I did was I immediately began to buy with that 2.5 Ethereum. I bought here, here, and here for an average price of 165.8. Then I sold that back to here. And I was able to sell all of that Ethereum, the 2.5 Ethereum, for this much Bitcoin. Now, in calculating the amount of profit that I made, this is just the quick little way that I'm going to show you guys how to do that. What we have here is I typed in the 0.000 many ones. This is the price that I sold at. And this is the price that I bought at. The average price that I bought at when I weighted how much I bought at each price. And this is the rate. This is what it's going to equal is how much Bitcoin I received for that 2.5 Ethereum at the rate. So I received this much Bitcoin. And the ETH-BTC rate, again, was trading at, now it's trading much lower, but the ETH-BTC rate here was trading at 5.857. So I actually got Bitcoin at 0.06031 and realized an instant profit. This, I know, is complex, and it's still hard for me to wrap my brain around exactly how this works. So that's why we're going to be taking the final step, the most complex, which is going to be level 4 of looking at how to build these models for triangular arbitrage, recognize opportunities, and also use this on different kinds of markets as well. All right, traders, you made it to level 4 of triangular arbitrage. Now let's take a look at building arbitrage models and trying to use the order book to take advantage of these opportunities. Now, the first thing I want to say is that you can arbitrage any altcoin as long as it trades to multiple markets. So it doesn't always have to be ETH and BTC. But for example, if I wanted to arbitrage BNB to USD Tether, you could look at the ADA BNB rate relative to the ADA USDT rate, and then put that relative to the BNB USDT rate as well. So that's just another way that you could use arbitrage, because BTC and ETH are going to be very efficient with the way that arbitrages are typically not going to be available. But let's take a look at a coin where an arbitrage might just be available. Let's set that up as well. So let's take a look at key BTC divided by key ETH. And what I'm going to do here is I am going to add the ETH BTC rate onto here, because I want to know the rate that I'm comparing this to. Now, when your ETH BTC rate does pop up, or BNB ETH, or whatever cross rate you pick, it's probably not going to show up as this blue line. It's going to show up as red and green. And what you're going to want to do is double click that and just change around the settings to something like this. Also, try to disable percentage, because that's typically not going to be that helpful. So what this shows is that at the current ETH BTC rate, we could potentially see that we would want to buy key ETH and immediately sell it back to key BTC. The reason I say that is you can see that that rate is trading here. Well, now someone just sold here, but the rate's trading here, which means that if we were to buy key ETH and then sell that back to key BTC, then convert that BTC back into Ethereum, then we would receive an instant 0.78% profit. So here we would want ETH BTC to continue to fall if we were to try to arbitrage this opportunity where we were buying key ETH. So if we believe that ETH BTC is going to continue to fall, or if it's just going to continue to remain static and sideways, let's go take a look at buying key ETH. So this is telling me this is undervalued, even though it looks like this, whereas this is just too high because it's selling at 156. So if I wanted to, I could try to actually buy this coin at, I could even buy at, let's say, like 2715. Let me write that in here. And a hypothetical, imagine that we put one Ethereum. We buy with one Ethereum at the rate of 2715. We would get 36832 key. Now imagine that we want to sell that at 156. 36832. And we would receive 0.0574 Bitcoin for that one Ethereum. Now the current FBTC rate is at 0.0571 just about. So if I was to actually plot a horizontal line just to show the actual level of how much we would receive, let me just copy that and let me just paste it onto here. We would receive a rebate of about 0.6%. After fees, that would be around 0.45% arbitrage. So let's go try to do this. Let us buy key at 2715. So I'm going to buy this 2715. I'm going to use, let's just do as a test 0.1 Ethereum. And let's see if we can get our order filled. So our order was filled at 2715, as you can see there. And we now have key, as you can see. So let's go to key BTC here, and let me try to sell at 156. So I'm going to put sell at 156. I'm going to put the maximum amount of key that I can, so you can see here, at 156. And I'm going to hit sell. Okay. Now, one thing is the 155 rate did pop up here, as you can see. But I expect that this rate's probably going to fall, as buyers will probably buy this rate up. It's inefficient, and eventually they will begin buying the 156 rate, which would give me an arbitrage profit as long as the FBTC rate does not go above the horizontal line here. Now this is the interesting part. If FBTC begins to trade above this horizontal line, then I'm out of the money. If it trades any level below this horizontal line, I'm actually in the money. because what I can actually do is even better for me. If FBTC begins to go down, then my profit's just going to increase. If FBTC went down to like here, then I would receive a bigger profit. So in a way, one way to think about this kind of arbitrage is shorting and longing a altcoin at a better price than actually possible. That's one way to think about it. Now, there are instances where you might actually lose money on an arbitrage, and there are some ways that you want to deal with that in trying to get out. So an example here is, imagine that I see 154 falls, 153 falls, and just price probably isn't going to reach my 156. What would I do? Well, at that rate, I know that I bought key ETH at 2715. So I could even just try to sell at break even, where I try to place a limit sell order at 2715, try to sell it at a very slight loss. And that's what I would probably want to do if the key BTC rate was going down. Now, if key BTC and key ETH were both going down and I was really in a bad position, then I might just want to market sell and take about a 0.5% loss at these rates here. So really, it also comes down to risk management of how you are able to handle this, as you can see. And one quick hypothetical that I do want to show is, what if I just wanted to sell at 155? Why not? I'm not going to, but let's just take a look at what would happen. The amount of key that I currently own is 3683. So if I did that, then I would receive this much Bitcoin with that 0.1 Ethereum that I traded in. 570 is, let me put that up here. I think the horizontal line vanished. Oh, because the 0 was off. Yeah, I see. To just delete that to 0. Yep. So that would be here. So basically, if I sold at 155, I would just basically receive the ETH-BTC rate. I don't want to sell at 155. So that's why I'm going to try to sell at 156. As you can see here. Now, you may be wondering, why didn't you just try to buy at 154 and then try to sell at 156 just for an easy profit? Why not just do that and pay less fees? The thing is, the reason why you use arbitrage is you're not always going to be able to buy at 154. We've had a lot of buying here, so I'm trying to take advantage of that buying here, and I'm trying to take advantage of the selling here to try to match that price inefficiency. Because if I actually just bought here at 2715 and tried to sell at a higher rate, I'm probably not going to do that. Way too many potential sellers here. And on the flip side of what I just said here, if I just tried to buy key BTC at 154, then immediately sell it back at 156, I would probably not. That would probably not work. So this is why I'm able to arbitrage this and effectively short ETH-BTC at this rate. And we will see if this gets filled. I sure hope it does get filled as buyers begin to buy up 156. So this is really what it comes down to with triangular arbitrage. I'm just looking for mismatch price opportunities, placing a limit buyer, placing a limit sell order in the order book, hoping that order gets filled. And if it does, we profit. As long as the indicated rate doesn't move above our profit price, our strike price, and if I want to go into a loss, I can just go into the original coin, such as here, and sell it at a lower number, or I could even just try to sell at 155 for a very slight loss. So there are a lot of ways with arbitrage that you're going to be losing just a little bit on some trades, but it's rare that you're just going to lose a ton on an arbitrage trade if you know what you're doing and if you know how it works. It's unlikely that you're going to be losing a ton. The only reason why you would ever lose a lot of money on an arbitrage trade is due to volatility. For example, if this just crashed and key ETH just crashed, I would lose money. But the lack of volatility is what we're profiting off of here when prices are just static. So that's why you want to look for coins that have no volatility, really, such as this, where the coin's not really moving that much. It's kind of just static at this price. All right, and I will update in the description if this order gets filled and if my operation here was profitable. If you have any questions on this, you can check out my Patreon, or you could just comment in the comment section below. Thank you for watching, and happy arbing.